Alrighty. In this on this tutorial, what I want to do is walk Barry through here how I utilize the EMAs, exponential moving average, how I use it. Again, I had indicated that. In fact, I'll read it right off. Uh, the EMA is the preferred indicator for day traders. That being said, the EMA is a retail trader's tool. 95% of my personal trading is straight and naked charts, reading price action and market structure. 5% of my trades, I will utilize the EMAs and only use the EMAs for two reasons. Number one, to observe levels, and I'll walk you through it. It's actually to observe these levels, right? It's 1 hour chart, levels, and to bounce off EMA, exponential moving average. When the chart is trending, price will bounce off of the EMA. So yeah, let me. So I want to kind of give you a little more detail on this. All right. So here we have a 1 hour chart, okay? And on the 1 hour chart, I'm going to mark this off really quick. We have a crossover here, okay? See this crossover between the 50, which is the blue line, and the 200, which is the white line, okay? That crossover is an indication of change in um, trend, okay? We could also match this up with price action. And I'm going to show you. See this right here? This is price action. Boom. See that? Switch in market structure. So we have here SMS. Boom. What is that? SMS is possibility of change. If you guys have been watching my vids, you know, right? SMS. And then, of course, the BMS. The BMS would be identified right there. Boom. Okay. So that was the break in market structure. Boom. Which is confirmation of change in direction. Now, let me explain. We've already have an established trend, right? Direction. Okay, there it is. Well, we already have an established trend. And so this BMS, we broke this structure here. This was the structure. This liquidity point is what we broke. We broke it with this push to the upside and then a pullback. That was the structure that we broke in order to have not a confirmation of change in direction. It is a continuation because we already have an established trend. All right. So if we were to go to the 4 hour chart, our trend is going up and it has been going up. So in reality, all we have for that BMS is not a confirmation, but more of a continuation. Okay. So, okay. So that being said, let me get back to the 1 hour chart so we can get to the EMA. Okay. So here's level one. This is how I'm reading levels and utilizing the EMAs. And the idea behind reading levels, okay, is that price will move in three levels, theoretically. It is the power of threes, you know, threes in art. You probably understand this, Barry, because you studied film and you were a director in LA, so I'm sure you know this. So that is level one is an indication of level one through observation of crossover of the EMAs is this baby blue 50 EMA line, right? And that's it right here, the 50. And the baby blue color is that EMA. And the white line is the 200 right here, EMA 200, indicated by the white line. So that crossover tells me that we have a level one. And then as the crossover has been completed, the widening of the mouth is now a level 2. Okay. Okay. And of course, the widest part of the mouth, which is this, the mouth of the exponential moving average, when it widens the most, is a level 3. So that's how I use it when I'm reading the levels. Okay. Now, the other way that I utilize the EMAs is price will bounce off of the EMA. And, um, oh, by the way, let me go back to this theoretical model of reading levels 1, 2, 3. After 3 levels, we should expect a pullback, right? So it would look something like this, right? Here's 1, 2, and then of course this is level 3. We should expect a pullback, something like this, right? And then the pullback, what I recognize is that Bitcoin seems to give us 2 levels down on a pullback that is counter trend. It's going against the overall trend. The bias direction trend is up. Pullbacks into it gives us 2, 1, 2. And then after the 1 and 2, it continues climbing for another 3 levels. Now, this is just a quick and dirty observation I've made. It's a little nuance of the market makers movement. Um, but really, reading levels is what is called the market maker cycle. What I mean by market maker cycle is reading the peak formation low right here. This is peak formation low and the peak formation high, which some traders call it the swing low, swing high. And what that does is it gives us an opportunity to know where to place our fibs, right there. Well, so that's what it does. Um, uh, and all right, so again, that is a theoretical model. Does it always do 3 levels? Level 1, level 2, level 3? No, because Ethereum gave us 2 levels. Let me look at this again. Ethereum gave us back here level 1, level 2, and then it gave us a reset into a level 1, 2, and 3. All right. Again, on the 1 hour chart. And I read levels off the 1 hour chart. All right. And then going back to Bitcoin. The second way that I use EMAs is when I'm identifying a pullback. See this pullback right here? Pulls back to the 200 EMA. Now, EMAs and indicators in general are retailers' tools. The market maker knows this. And every once in a while, he'll throw a bone, a little bit of hope that, oh my gosh, I know what I'm doing. Every time it hits the 200 EMA, I'm golden. I can make money. Well, you know what? He never hit the 200 EMA here. Only one time was right there. In fact, he never even hit it over here. He's bouncing off the 50. Barely bounced off the 50, right? So there's an inconsistency. So I don't rely on it. It's a very weak indicator of where the market is going to be moving. I'll tell you a better way is, of course, reading the naked chart, right? So when price came up here, pulled back. As soon as it pulled back, my question is, okay, how far will it pull back? Well, here it is. Drop my fib. In fact, you know what? Let's do it even better way. Ready? What's this? See if I can get in there. Oh shoot, I can't. Let me see. Hold on. Oh yeah, here we go. Bar replay. Okay. So here it is. Here's our replay. So I'm going to mark it here. Okay. So right there, we've got this data, and we don't know what's going to happen here. So I'm going to move the chart forward. So forward, we're moving. Price is basically Let me move it a little quicker. It's faster. Okay, price is moving down. Price is moving down. Created a peak formation high. Moving average crossed over. Oh, let me slow this down a little bit. Moving average crossed over, giving us a level 1 and also a BMS, right? Breaks another structure right here. Breaks this structure here. In fact, let me pause this. So we broke structure here, which also gives us confirmation of which concurs or confluence. It gives us additional confluence that we have continued trend. Here's another break in structure. So we broke this structure. The break was this candle right here. We broke this structure. I'm sorry, this structure, and the break was this candle. Okay, and we are climbing up. So let's continue. Now the question is this. Oh, shoot. Sorry. Okay. Here we go. So as soon as price, in fact, you know what? I wonder if I could back this up. Bar replay. Yeah, let me do this again. Yes. Okay, here. Whoop. Okay, let's just start this over again. Sorry, guys. Bar replay. Boom. I went too fast on that previous one. Okay. Because I really want you guys to see this and get this. So price is establishing its lower low. I mean, I'm sorry, it's peak low, and now we have a break in market structure here first. This actually was the very first break in market structure because we had lower low. I'm sorry, lower high, lower high, lower high, and then this was our first BMS right there. Okay, and then we waited, and boom, we had BMS here. Boom, right up there. Now watch. BMS there, and I'm waiting for a pullback. There's the pullback. You see that? That's my pullback. See, price is starting to pull back. Now the price is starting to pull back. I'm going to drop my fib, and I'm going to drop my fib from here to here to the high. Because my question is, how far back will the pullback be? Because I like to see entries with the highest probability. What is the highest probability trade? The highest probability trade will be when price hits the 50 line or better, deeper. The reason is because this is what is called institutional discount range. The bias direction is to the up for our longs, right? That's the direction in which we are moving, the overall trend. This is where order flow, institutional order flow is pushing up. So now that we're pushing up, we have a pullback. My question is, how far back will the pullback be? Well, and ideally, I like to see pullbacks go 50% of the fib line or better, because inside this range here, inside this box here, all this area is what is called institutional discount range. Because right now, price is at a premium right up here. It's at a premium, so I need price to come down here. So let's take a look at this. All right, ready? Here we go. We're going to go forward. Price is bouncing, and boom. You see that? Price hit the 50 line, and it also hit the EMA. Now, if I had no EMAs, right, because typically my chart looks like this, I rely on the institutional discount range to tell me when to find a new entry, not the EMA. So it is very rare that I will use this EMA to use the retailer's tool for finding an identification for an entry. Because look, down here, price never even came to this 200. In fact, price barely hit the 200, the 50, and we were bouncing between from level 1 to level 2, and only until it hit level 3, but it even dug a little bit deeper. So, I mean, see how inconsistent reading EMAs are? People could say it's, oh, yeah, it does it. No, it doesn't. Go ahead and backtest it and tell me how often it hits it. And you know what? If it does hit it, you're going to be waiting a long time for every time for this to hit. So what, between this and this, you've only hit one entry? While you're doing one entry, I've already hit two entries. I've hit an entry right here, and I've hit another entry right here. Because what I'm reading is a highest probability trade, and my highest probability trade is going to be when price hits the 50 institutional 50 line on my fibs and digs deep into institutional discount range. So in this case here, price dropped 50 and hit the EMA. Again, market maker sees this. He knows this. He knows this is a retailer's tool, and these rookies that are using this as a tool. So every once in a while, he'll throw a bone, give these the make the trader feels like they know what they're doing, but they don't know what they're doing. What we're doing is we are following institutional money. And when you understand that this is institutional discount range, when you understand that this is institutional premium range, you know that the pullback is going to, the highest probability trade will be the pullbacks that go into 50 or better on the institutional discount range. Anyways, I really wanted to hammer that home. Why? And I know I talk a little strong on this particular video because honestly, I really hate indicators. I really hate indicators. This is all, it's all BS to me. And, yeah, so for the most part, that's what my chart looks like. Okay, so where would I find my entry? Look, take a look on the 1 hour chart. Right, let's blow it up. Let's get a little deeper on this. We could be looking for a candle pattern. Right, now let's take a look. Candle pattern, and then boom. See this candle pattern right here? This engulfing 50 line with an engulfing. Right, that's your entry right there. In fact, if you wanted to, you could even drop it to a lower time frame. And on the 15-minute, take a look what it gives you on the 15-minute, right? 15-minute gives you right here. Here's the candle pattern. So we got hit the 50 line, and here's the candle pattern engulfing right there. So your entry would have been this, but now we could actually would have dropped to the 15-minute, and that would have been your entry right there. You know, and on the next tutorial, I'm going to be teaching about order blocks. And then you will understand that you can be a sniper about your entries by just understanding order blocks. So here's an order block, right? So in reality, you could have put your entry right here, and your stop loss would have been minimum, really, really shallow, 25 pips with a reward of up here so far 123. It even goes higher up. In fact, you guys, if you guys have read my recent pick, I uploaded on FS actually. I entered in on trade here, and this trade right here is already up 400 pips, and I'm still on the trade from down here, and price is way up here, and that is 500 pips. Anyways, let's follow the rest of this. Let's go back to the 1 hour chart. So yeah, just summarizing. Again, I've just showed you guys how I use my the EMAs for reading levels, all right? And I've also showed you how retailers use the EMA to bounce off of, all right? So let's watch price. Boom, boom, and here it is. Here's price. Boom. It's moving, 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 and then breaks from a level 1 to a level 3 over the weekend. Boom. Dug even deeper into profitable territory on the trade that I got in on. Anyways, that concludes this here. Sorry for that long rant. And if I was a little strong on the EMA and my talk about it, it's because really I hate EMAs. I mean, indicators. I don't like indicators at all. In fact, let me fill you in on a little secret here before I let you go. All right. Want to know how to read an RSI? Here it is. Your fibs are your oscillators. If you know how to drop your fib, you now have the upper band and the lower band. So when price broke over here, right? Oh, there it is. When price BMS here, here's the lower fib, Here's the higher fib, and every time price dropped into the 50 band, boom, there's your entry. Boom, here's your entry. And then, of course, breaks up into a level 3.